Hi there, a very good morning, good evening to all of you, depending on wherever you're watching me. This Simply Talks, and I'm live in this live session with you all. Hopefully, all of you are watching me clearly and hearing me clearly as well. So, today I'm going to talk about a very interesting company that is Divi's Lab as to why the stock has fallen so much and why the performance of the company has not been that great. So we'll discuss about Divi's lab in details and as to where the value lies and whether one should buy here as it is falling so much, the reasons as to why it has fallen, and the fact is uh, perhaps many of you would have been invested. The stock has fallen around 40-50%. How much has the stock fallen, and so on and so forth. We will discuss all the points with you. So, a very good evening to you. Hope your investment and trading journey is going well, and you are doing well on that front. Uh, so overall, the performance you can say per se uh, of the market has been pretty decent, and we have seen that the market itself has done reasonably well over the last 4 or 5 days, although it has been up and down because of one group. But things have not been, you can say, extremely bad, considering the kind of, you can say, mayhem we have seen with the Adani Group stocks. And you would have probably gone through a lot of videos of Adani Group and the person known as to why that is happening. But I'm just shifting focus to this, you can say, stock altogether as to how and why. I mean, the performance of Divi's lab has not been that great, and why one should be looking at it at the moment, or should one be avoiding the stock altogether. So we will discuss in detail as to what needs to be done in here, and what is required here. So just to begin the session per se and let more people join in, what I would suggest is that, uh, in my opinion, is just wait a bit so that more people join in, and so that we can begin the session in earnest. And let me just open up the market as such and understand as to where the main Nifty is going. We'll discuss about the Nifty, and then we will discuss about Divi's lab in detail as to why the stock has been so much up and down. So when we look at the Nifty 50 uh, on the money control side, we are able to view the charts pretty well. So we'll try to find out as to where the mainline index is, and where could be there will be more value or support, and where are we headed probably in the next week or 2 weeks time frame. So let's understand that. So the market is around 17,850 after a lot of hullabaloo, and the market going to 17,500, 400. It has barely, you can say, breached that. 17,500 was perhaps a very major support, because if that was broken, we would have gone down another 3-4 percentage points to around 16,800. So we have respected 17,500 for now. Now let's see how things pan out from tomorrow onwards. And once these levels of 17,500 to 17,400, this 100-point range is, you can say, supported, we can hope for a retracement to these levels of 18,100, 200. Otherwise, if this 17,400 is taken out with earnest and taken out for good, then we could be headed towards, if we see a 1 year chart of this, then we could be headed all the way to this kind of a band, which was around 16,800 level. So all the way to 16,700, 800. So it is extremely important that levels closer to 17,500 is supported. Otherwise, we'll be down 7 800 points. Let's see how this saga ends, or how this saga pans out over the next couple of weeks, and then we'll be able to understand as to where the whole market is headed, and where are we headed all together. So that's the call in there. uh, about the Nifty. Uh, so in terms of the market, if we hold on to all these levels, will be fine. But stocks have done their own thing, and one of the largest stocks in this picture has been Divi's Lab. One of my erstwhile favorites in pharma. I have talked about it uh, a lot of times, and it has been disappointing to see how the numbers pan out. So let's just first go through the numbers for the December quarter. Then we'll just highlight 4 5 points as to why the numbers have been the way they have been, and then we'll discuss as to what needs to be done, and then I'll answer your queries as well. So these are the December quarter numbers. I'm on the screen of website, and if you look at it on a consolidated basis, they had sales of 1700 crores or so. If you see here, around 1708, versus in the last year in December, the sales were closer to 2000 crores, 1988 or so. They had another income of 19 crores last time around, which propelled the numbers even further closer to, say, something like uh, 2000 crores last time around. But you look at it here, is that even with another income of 114 crores, we don't go anywhere close. So basically what has happened is that their expenses have been around 1300 crores, and overall they have made profits of 408 crores this time around, versus profits of 1100 crores last time in December 21. So abysmal numbers. Margins have shrunk sharply from 44%, they are down to 24%, and this is the basic reason why the stock fell so much, because these kind of margins were not there even before the pandemic. They were not there before the pandemic. And yes, we'll discuss about the reasons, but margins got propelled big time during the pandemic year. So it was around 32 35% earlier, but got propelled and accelerated to 40%. Consistently the margins remained over 40%. If you look at it here, from June 2020 all the way to March 22, and then things started to look extremely shaky. And there are a few reasons for that, and eventually we have now been hit on the face with respect to our margins being around 24%. So what are the you can say different reasons why are we looking at a situation where we have a situation where the margins are so bad and the stock has been hit so badly. So there are you can say 4 5 reasons per se. The first reason for this is the fact that their main molecule, that is molnupiravir, that has been molnupiravir has been discontinued virtually. Now on, there is very little demand, not discontinued but extremely little demand for the same. This is the, you can say, the main uh, API or pharma ingredient that used to go into most of the pandemic drug that we talk about. And throughout 2020 and 2021, we use that. In fact, till March 21, March 22, that was in fairly in demand, but things started to wane off from March 22 onwards, and that is where you see the numbers dip. So in March 22, you had you can say uh, margins of 44%, which dipped to 38% and kept on dipping. So this is the first and primary reason that their you can say product of molnupiravir is no longer required that much as it was required over the last 2 2.5 years. Second huge reason is that normally most of the API formulation, you can say companies, they end up, you can say, producing in bulk, producing in millions of tons or in thousands of kg, these kind of, you can say, medicinal products, rather than making 50 kg, 100 kg batches, which Devi's lab was able to do because of their, you can say, operational performance, because of their infrastructure, the way their infrastructure was before the pandemic. So it was required for a company to produce 50 kg, 100 kg batches of API formulations, because there were a lot of companies requiring that in order to, you can say, do testing for various kind of medicines, especially during 2020 and 2021. So there was a higher margin there because you're producing less, so you can ask for higher margins because you're producing 50 to 100 kg of, you can say, products, 100 kg of that particular drug, and not a huge amount, and you're able to do it with the same facility that you have, so there's not much cost to you. The same cost comes in and the margin gets expanded big time. So these two products, Monipiravir and this sort of, you can say, batches of 50 to 100 kg of product that they were selling, these two factors contributed a lot to what they ended up with, the kind of margins of 40 to 45% margin that they ended up with, which resulted in a PE expansion for Divis over the last 2 years. If you look at the charts here, and if you look at a 3 year PE thing for the company, it expanded big time from 44, around 40, 38 to 40 during February, March of 2020. It expanded all the way to 65, even 70. And doubling of this PE has more or less been because of these two major factors, because that was a huge money churner for them. Imagine having margins earlier. If I look at yearly numbers till March of 19, they had margins of around 34 to 38%. They came out with 38% purely because between Jan and March, they started producing this product and started selling it globally because the pandemic hit in December. So if you look at March 18, the margins were around 33%. Let's say on an average, the margins remained around 35% or so. And then suddenly the margin expanded all the way to 45% in some cases, around 45%, 44% in some of the quarters. So these are the two basic reasons as to why the margins have got hit big time. A third reason is with all the companies where the margin shrinkage has happened because of the higher raw material cost, higher crude prices, higher, you can say, shipping charges. So you can say freight prices got very you can say steeped, and then you had a labor cost that has gone through the roof with the inflation coming in. Higher cost of capital is also a reason as to why company has not done well. This higher cost of capital will also come into the factor in my reason 4. So reason 3 is the higher raw material cost and other cost that has come in. Fourth reason that I want to mention in here is the fact that the company uh, was to establish a plant in Kakinada, in I think in Andhra Pradesh, and that plant, that greenfield project, has to go on stream very early on, but it has got delayed by a number of factors. The land acquisition thing is not going that smoothly with a lot of protest, and there are other factors for the EV's lab that is happening, and that is a major expansion that they are looking to do from 2016 onwards. And over the last 6 years they have not been able to do that, and once they do that, it would be a huge opportunity. The one more reason, that the fifth reason that is linked to it and why the selling is happening, is because they are not able to do that. They're not going to expand their business more because there's a huge opportunity coming in between 2023 and 2025, where a lot of products are going off patent. So there are a lot of, you can say, patents that could be issued by 25, but for that to happen, the demand will be even more. So the expansion has to take place. Now the street expects, and the street is pretty skeptical because over the last 6 years, these expansion projects have not completed. Whether that will take place or not, if that doesn't happen, then some other company, probably a smaller company than Divi's Lab, or any other larger player, might take that business away, and Divi's might not have that business altogether, and eventually they'll lose out on revenue as well. In the revenue front, if you look at over the last 5 6 years 7 years, they have done exceedingly well, to have a situation where revenues from 2500 crores in 2014, if you look at here, it has expanded manifold to around 9000 crores by 2022. So there also it could get hit, and this is what the street, you can say, really contemplating as to whether they'll be able to expand their business enough or not. This is the fifth reason, that whether the expansion will take place or not, there, so that they get more business altogether. So all in all, the company is pretty good, their execution is pretty good, and whatever their products, and they don't get many US FDA, you can say, bans, etc. ROE of around 35%, which may have dipped 2 3 percentage points by now, but still ROCE of 35%, ROE of 28% is pretty decent. And the company that used to come at 60 70 times just a year back is trading at 32 times. So we'll discuss about the valuation in a bit. But overall, these are the 4 5 reasons as to why, you can say, the performance of Divi's lab have not been up to the mark. So in my opinion, what needs to be done, let's discuss that as to what needs to be done in the stock, and whether we are finding value at 2880 2900 on the stock, or one should completely avoid the stock even now. That depends on a couple of factors, and the number one factor in here is whether the company is able to execute well for, you can say, their greenfield projects and expansion, so that they are able to catch on to the bandwagon of getting more orders, getting more patents during the next 2 years. So next 2 years could be a very, you can say, uh, I would say, volatile phase and exciting phase for the pharma industry, because there could be some companies gaining a lot of, you can say, orders, gaining a lot of orders with traction, where others might miss out. So we have to understand that in the next 2 years, there could be more pharma companies coming out, and probably coming out of this mire, and becoming leaders. We'll see how that pans out. And this is exactly why pharma as a sector has not done, or has not recovered as much as IT has done. So I will be more careful buying into any pharma company until I am extremely sure about any one of them, and I'll be more vigilant in order to buy any company, or in that fifth sense. Uh, I won't. I won't say that you can probably buy any company on the face of it, like a Dr. Reddy's or Sun Pharma or anything, and think that you can project the numbers, that the number, whatever numbers that have come out earlier. What I feel is that one should be looking at a situation where one should look at as to where the expansion has taken place, and they're getting, you can say, more approvals for different kind of products. Even if the stock has become more expensive, you can probably try to get into that stock. So that's one call. Second thing is, I think the numbers have to improve. So I won't say that a stock that is trading at 50 60 times should have a margins of only 24%. The margins should at least improve. If you look at these numbers, then in March 14 and 15, they were producing margins of 40% as well. At least the margins should be somewhere close to 30 35%. Uh, Somehow the company has to come out with margins close to 30 35%. It will take 2 to 3 quarters. I don't think this will happen immediately. So in all, I feel it is an avoid. I think People might think that the stock has fallen from, say, levels of 5,000, all the way to 2,800, and probably at 2,600 it will be down 50%. It's time to buy. I think this is a potential sequent in making, and I'm not making this up. There could be a chance where the stock could go down another 20-25% from here if they don't get their act together with respect to margins and with respect to their expansion that has been delayed for quite some time. If that doesn't happen, then this market cap of 76,000 crore could very well go down to around 60,000, and then probably eventually 50,000 crores or so. And that's where probably we will find some sort of a value. I don't think at these you can say at these valuations one can be comfortable buying into the stock when we are looking at 15 times sales and all those kind of things. So I think technically speaking, if you look at on the price chart currently at 2800, it has broken major support of 3000, 3200, and we are headed towards at least 2200. If things doesn't improve very quickly, then eventually in 6 months, in 2 quarters, there could be up and down movement, there could be an upsurge, there could be a rally to 34, 3500, but that will only be a rally to sell, and large players might exit because if there are no major announcements. So 3500 is your ceiling, and we are headed towards these levels which are closer to 2100, 2200, where the stock may find some support, but an eventual target, I won't be surprised if an eventual target of 1800, 1900 is met over the next year or so, or 7 8 months. So in my opinion, there's more to go. And if we are looking at say even something like 2100 from here, then we are looking at still uh, about 750 rupees of cut on the stock. That's 26% more downside on the stock. So be extremely careful buying at this point of time when we are looking at 26% from this market cap of 76,500, and we are looking at 20,000 crore market cap gone even more. We are looking at 56,000 crore for the company at sales of closer to 9,000 crores. Still it will be trading at 6 times earnings, 6 times sales, sorry. So if we look at on a PE basis, uh, over the last 5 years, uh, sorry, on a price to sales basis, that is what I want to look at. On a price to sales basis, it looks very very attractive at around, you can say, 9 times, but I think we are headed towards 6 times sales. It was around 9 times sales earlier uh, in March of 2020, but if we look at a 10-year chart of the company, then you see that 9 times is not quite the cheapest where the stock has traded. Stock has traded around 4 times sales as well during 2017, and quite readily they have traded around 7 to 9 times sales. Not that it is very very cheap. So around 9 times sales is the average, but with the kind of numbers it's producing, one more quarter of such thing and we are headed towards 56,000 crores. And so basically, all in all, it doesn't seem like a best trade or buy even on a long term basis at these levels unless numbers improve. That's my call. Normally, I do think that over a 3 4 year period, a stock becomes attractive after such a fall. But here, I feel that things need to improve, because if that greenfield project doesn't go through, and they don't get approvals, and things are not in on stream in the next couple of years, then there's major trouble for the company altogether. Although at this point of time, it doesn't look like that things will be so bad, but we have to see. We have to see as to uh, things pan out properly, and then probably we'll decide as to what needs to be done altogether. So Divi's lab, for me, in one line, is an avoid at this time. And an exit on rallies. So you don't exit. So somebody who is holding on to the stock, say at 4,000, 35, 3,600, 3,400 levels, they wait, probably keep a stop loss. So let me have a look at it on the price basis, on a 5 year basis, as to where the support lies. So unfortunately, the support lied around 3,000. It got broken just recently. So any kind of rise towards 2,900 tomorrow would be a very good selling opportunity. It is around 2890, 2880. If it opens higher, which looks very bleak, but if it's open higher around 3,000 and there is no other announcement to, you can say, impact the stock price, exit the stock on any 2 3 percentage point up move. Take that hit, because now the big selling could begin in the stock, and that could take the stock, as I mentioned, to 2,200 within weeks, probably 3 4 weeks. Eventually it could gyrate between 2,400, 2,200. But if numbers keep on, you can say, disappointing, then we are looking at 1,600 levels even. So 1,800, levels on the stock. So either you get ready for 1,800 levels from here, which is a 1,000 point, 1,100 point decline, which is a 33 34% decline on the stock, or you probably exit now and take a call later on, once after 2 3 quarters, really you know that Divis itself have has expanded well, and is looking set to do big things after the many of the products or medicines go off patent, and eventually they would probably get more patents and get things going again. So that's the call on Divi's lab. I'm ready to answer your queries. Kindly use the super chat and super sticker. That will help me grow channel. That will help you also ask me questions and eke out answers in greater detail. So over the next 8 10 minutes, I'll answer your queries. So my view, Mr. Pawar, on HDFC Life is this, that one can definitely accumulate here. And this is, you can say, a situation where the uh, PE will contract because of the current, because of the new rules that has come up. But the growth will remain. Growth will not be affected that much, because what the cap is on 5 lakh rupees premium. So keep on accumulating here. Those who are invested, keep invested, and probably start accumulating on any 5 7% decline, and keep on buying. That would be the call, and have a 5 year time horizon at least on these kind of stocks. So that's the call. My view on Bajaj Finance is that now the PE will not be the same, because their growth, although numbers are good, but because they have mentioned that the growth will be hit. So I think it would be, it's time to those, for those who are invested in the stock from uh, from the last 4 5 years. They should look to probably uh, exit and book profits, and those who are buying it for the next 5 years should accumulate and keep on accumulating on dips. But I don't think over the next 1 2 years it could become very big or something like that. uh, Birlasoft, extremely bad results. I think the company has gone into losses, and the way the stock has fallen, and there have been, you can say, calls for the stock to go to 500 600 over the next 6 months, or by now. Uh, I think 6 months back, people were talking of 550 600, and now we are looking at very dismal situation for Birlasoft. Numbers have not been that great. It is an avoid. Those who hold on rallies should exit. So that's my call on Birlasoft. See, I'm uh, particularly positive on most IT companies if they are producing 18 20% profit growth, even if margins have shrunk. So LTI, LTTS, you have TCS, Infosys. Uh, very positive on mid cap IT. Most of those companies as well. So Coforge is also looking good. So Nazir, I've talked about Asian Paints in detail. Kindly go through that video as well. A disclaimer: I am invested in the stock from a 10 15 year time frame, 20 year time frame, and I believe these are times to accumulate the stock rather than look at it in a way that over the last 1 1.5 years it has not done anything. So that's the call. Ravi Jubilant Foodworks, again a company with which I'm extremely disappointed with the kind of numbers it has produced. I would say if you are able to exit the stock. If you are not able to on rallies, one can exit. Happiest Minds is an avoid still. I have not looked at the numbers this time around, but I don't think Happiest Mind is something to be looked at unless the valuation shrinks sharply from the valuations that it is currently trading at. If you are holding on to the stock and you're not in major losses, you can take a loss, exit. If you can't take a loss, hold on to the stock. You will get rallies to exit, and that is where you need to probably take a call at that point of time. Deepak Nitrite, Nazir, I have not looked at it, so I won't be able to comment much on it. Kilpest, a stock that I hold, I'm particularly, you can say, very bullish on the stock. Let's wait for the numbers. Numbers are on the 14th, and let's see how the numbers pan out, and then only I can give a call because there have been a lot of queries on Kilpest. Then probably on the 14th, that is a Wednesday. So on Thursday, I'll during the live session I'll discuss about Kilpest. So that's my opinion. Their Reliance is a buy at these levels. I think on dips, so one can buy from a long term point of view. See Reliance, TCS, Infosys, Asian Paints, Pidilite, Titan, HDFC Life, HDFC Bank, Kotak, ICICI. You look at other kind of companies like L&T and Cummins and whatever I talk about, Hero, Bajaj, all these companies are 5 6 year picks and can be accumulated at these levels. See, KPIT came out with very strong numbers, and my feeling is that it could go to 1,000 levels even from here. But if you have bought at lower levels, you can hold on. Don't buy afresh at these levels because the valuations are stretched, and one result up and down could have a divis in the making. Because if you are trading at 60, 70, 80 times, which divis were trading at, as I mentioned 6 months back, this is exactly what happens if your numbers go haywire. So don't buy afresh. In fact, at this point of time, I'll do a session in 2 3 days, and probably my a learning that I can give at the moment, or a tutorial I would give, that valuations do matter. And at these times where the cost of capital is big, one should look at companies where value is, where there's deep undervaluation. Even if the numbers are up and down, one should buy that if you think that numbers are going to be reasonably better. So that's where you need to look at rather than buying into 60, 70, 80 PE companies. So that's my call on the stocks. Well, Wolf, I hope it does because many people are stuck into it, and it can do that definitely. I am not saying it will not do it, but the thing is, it might go to 2,000 and then cross 5,000. Now, if you're ready for that, 2 years is a long time. It can definitely do that if they get things in order. They will cross 5,000 and the numbers will start kicking in. Uh, but what will happen in the next 6 months? That's what I'm discussing, and I believe that if two more quarters of such numbers come up, we are looking at 1,800, and then probably uh, 18 months hence from that 6 months, we are looking at 5,000 for sure. But do we find value at 2,800, 2,900 to buy? I don't think so. So that's my call. NCC I have not looked at for major portion, Khalid, so I won't be able to comment much. As it is for Anand Rathi, I don't, you can say, follow that stock. I won't be able to comment. I think you can average IEX at these levels. IEX has value now compared to when it was trading at 200, 250, whatever obnoxious level in 2021. So at these levels, yes, one can buy. Tata Elxsi Champak at these levels is a buy. Any dip towards 6,000, you can accumulate more. It's not that you buy everything now. Buy now and buy more at 6,000. I think at a PE of 40, it looks more. I think 50 55, it looks more attractive than 100 120. And this is where valuation do come in, that if you're buying a stock that is at 100 PE, afresh if you're buying, then you're believing that the growth will be 50 60% going forward as well. So be extremely careful on buying a stock at 80 to 100 PE. And exactly that is what has happened with Amber. that you're asking about, Kranti, a year back, and exactly what has happened with Dixon at 120 PE with such kind of numbers that eventually the street lost their patience, and we see the stock go down. So I'll discuss Dixon as a stock probably on Tuesday in a live session. I'll write it down. So there are a number of stocks that have fallen this way. There have been a number of accidents, we call it, with respect to numbers. Uh, we'll discuss each one of them. So I'll discuss Dixon in detail later on. It's an avoid even now at these levels. That's the call on Dixon. See, HP adhesives I don't follow. FL looks good. I think FL here and on dips to 1020, looks good to be bought into. So that's the call. Polyplex again, a company that has been propped up by a number of calls, buy calls, etc. And now we are facing the brunt of it. Look at the valuation and then take a call. I think the valuations are stretched even now. It might not fall a lot, but I don't see it going up a lot or sharply. So that's the call on something like a polycab, or sorry, polyplex. Astral, you can start accumulating, Srinivas. There have been issues of raw material cost spiking for pipes over the last year and a half, and now it looks like it's waning away. So Astral around these levels. If you have a 2 to 3 year time frame, is a good buy Astral. That's the call. Sundaram Brakes is a decent small cap company, but analyze it completely. I have not been in touch for the last 2 3 quarters. I won't be able to say much. So if you can analyze these companies, you can definitely buy. Tube Investment has an up and down quarter for once. I think it is a buying opportunity here from a 2 3 year perspective. So that's the call there as well. Alright, guys, thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly do support me on Patreon. Links will be in the description. This is the email ID if you want to become a member on WhatsApp. A yearly membership is there. You can take that and you can become a member on Patreon with $10 and you get a lot of benefits. I'll be uploading the watch list just in a while, probably in half an hour's time. That will be uploaded. A small cap watch list I have of 20 stocks and a mid cap watch list of 20 stocks. So both will be uploaded. And I give calls on every Sunday or Monday for the week as to which are the stocks that can be bought from a 4 to 6 weeks time frame. So this is all majorly that you get. Plus, definitely you're able to ask queries unlimited basis on Patreon. One-on-one discussions you can definitely have through messages on Patreon and WhatsApp. So you can take those membership as well. So thanks a lot and take care.